Forex Focus brought to you by IG, taking a look at what has become, from what I can tell, the biggest day of the year for Japanese yen, and that's to the upside for yen, and one of the worst days for dollar in that dollar-yen pair is Bank of Japan coming out with some huge potential news. They haven't committed to anything yet, but allusions to coming out of negative interest rates for the first time since 2015. So would be potential huge news for Bank of Japan, huge collapse in dollar off of central banker from Japan, talking about coming out of negative territory for their interest rates, and historic yen rally, especially intraday. And let's start there, as dollar yen down more than 500 pips intraday today. A huge move from this morning, trading above 145 and at its lows getting down below 142, a high to low move here of 500 pips. And you can see dollar bounced back and was down, still considerably on the day, down more than a couple hundred pips, but just a huge move there intraday. And before we get into essentially when the dust settled, when the smoke cleared, what was the actual move here? What happened? And where are we going from here? Just want to talk about this move because I'm looking at a 1 minute chart, and very rarely does a trader look at anything less than, at its lowest, really 5 minutes. But I had to go down to a 1 minute chart just to get this move because it was so short lived. The move below 143 and then below 142 didn't even close a minute bar down there, which tells you that it lasted less than 60 seconds down there, but did trade below 153 for a couple of minutes, or 143, sorry, for a couple of minutes. And now it was a bad day for dollar yen going into this time frame of around noon, 1 o'clock Eastern. But you see there going into the big move, especially hitting 144, they take the market down to close to 143.5, which was the low on the trading session and the low for the last couple of weeks here for the market. And then you see that big bar below 143.5, and nothing substantial news oriented coming out at that time. What would have essentially been 1240, 1250 Eastern time. And so as far as I could tell, organic action, probably some stops being run right around 143.5. And now, of course, it might be a little bit less liquid of a day, given that Japan was out of the market by 12:30 Eastern time. Obviously, Asia getting ready to go to sleep at that point. But you have the US and Europe end of European session, but both those markets, high liquidity still in there. And so a very real move, but pretty wild. Want to point that out just because you rarely see, of course, people are constantly hunting for stops, especially in a market like this that's seen such huge extremes that we'll get to in a second. But you rarely see, 200 pips in a matter of a couple minutes there and back. As you can see, they got all the way right back up to 143.5, and that's around where we closed the day. But pretty crazy intraday move here. And at its lows, dollar falling more than 500 pips. Biggest move that I could find here in 2023. Now, where did we end the day? Around 143.5, which was still a really rough day for this dollar yen, as you can see, going into today, trading well above 145, actually closer to 147. And so big down day for dollar. It was able to bounce back a little bit here, but nowhere near to where it started the day. And so what happened? What actually substantially changed over the course of the trading day here. And it was news of a central banker from the Bank of Japan almost kind of glossing over the fact that the Bank of Japan is going to move away from negative interest rates. As he was saying, when we get back from negative, we have a lot of tools at our disposal for other central bank activity. And the market said, wait, you're going to hike out of negative territory. That's the biggest story out of the Bank of Japan in years, given that you see this is a very boring chart, especially since 2010, as interest rates have either been zero or they've been negative 10 basis points. And you go back to 2016, when they cut rates to negative 10 basis points, they haven't changed since then. And especially the last 2 years, you have almost every major global economy, the US, the Euro area, the UK, Australia, Canada, everybody hiking interest rates to fend off inflation over the course of the last 24 months plus. And Japan is negative the whole time. And so talks of a change here was more than enough to move this dollar yen market and in the favor of the yen, obviously, as a move higher in interest rates in a given region can lead to demand in a currency. And when you're talking about having negative interest rates for, half a decade, any news of a jump creating some demand for that yen. And so why are they talking about this now? Well, actually, the last handful of months has been some of the first that Japanese data has consistently looked pretty good, to be better than expected, essentially. And you might say, well, having high inflation, how is that a good thing? Well, they had negative inflation, deflation, for a good part of 2020 and 2021, as you can see here, all those prints that are under 0%. And going back to 2015, 2016, when they dropped interest rates to negative, Japan hasn't had inflation at 2%. And that's theoretically where central banks like to have inflation, is right there at 2%. And that means that your economy is, moving forward. Goods and services are getting slightly more expensive. There's demand for goods and services. People can pay for more expensive goods and services. A sign of a healthy economy. Hasn't been at or above 2% since 2015. And that's in the last 12 to 24 months, been consistently above 2%. And so finally, Japanese data starting to look healthy, good, whereas the US and other global economies maybe had a year head start on Japan here. And that's a reason why the dollar has rallied so much against this yen, is the outperformance that U.S. economic data has had over Japan. And so you can see, even with today's move, it looks like it could just be a blip, as 150 and where we're coming from in this market is a 30-year high for dollar yen. And so trading down to 143, 144, wherever you want to call it, is still closer to the highs than the lows for dollar yen. But, especially if the Bank of Japan starts hiking, and the elephant in the room that we'll get to in a second, if the U.S. starts cutting interest rates, could be a new trend, but could also be just a blip here, as we've been closer to 150 than we have 100 or 110 or 120 in the last 2 years, for sure. But I bring in that U.S. piece because this could dovetail to be a potentially bullish period for yen. You've got the historical price extremes to the downside in a market that potentially is, historically at least, mean reverting. You've got the Bank of Japan talking about how they're going to hike rates for the first time in almost a decade. And then potentially you have U.S. rates headed in the other direction, as right now U.S. is at over 5%, which compared to negative or potentially 0%, it's a big difference. But looking at the FedWatch tool here, saying more than a 50% chance that U.S. rates could fall by 100 basis points or more in 2024 here, down to 4%, or even there's 30% plus chance that they're under 4% by the end of next year, with the first cut scheduled potentially for March. Now, of course, the U.S. central bank doesn't have to do what the market thinks, but the market right now pricing in an almost 60% chance that the U.S. cuts as soon as March of 2024. If the Bank of Japan hikes at their next meeting or whenever in that time frame, could be potentially bullish for that yen. All of that being said, Bank of Japan has not formally done anything. They've alluded to the fact that they are going to lift off of negative 10 basis points, market moving on that potential, but Japan still has to go positive. And the U.S., if data turns back around, inflation spikes again in the U.S. could go back into holding unchanged or potentially hiking as well. But at least for right now, one of the biggest upside days for yen in a while, and one of the biggest dollar crashes that we've seen all year.